Both the euro and the pound sterling slid amid upbeat data from the United States. The US economy grew at a solid 2.9% annual rate last quarter, exceeding economists' forecasts for a 2.6% expansion. In addition, first-time claims for US unemployment benefits unexpectedly showed another sharp decrease in the week ended January 23rd. All these triggered an increase in the volume of long dollar positions. This means that the Fed has no reason to stop aggressive interest rate hikes. Although fourth quarter GDP was down from the 3.2% pace in the third quarter, the economy remained stable. Against this background, demand for risky assets weakened. Now the central bank's meeting to be held next week will be of key importance. In my view, the euro and the British pound may slip deeper into correction territory. However, before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes data on M3 money supply and private sector loans in the euro area. The key focus of market participants will be on ECB President Christine Lagarde's speech. Most likely she will comment on the need to stick to an aggressive policy path. This in turn will increase the risks of recession at the end of this year. Therefore, the euro's bullish run is expected to be limited. The United States is set to release data on personal spending and income as well as the PCE price index, the Federal Reserve's preferred inflation measure. Furthermore, traders may take notice of the University of Michigan's reports on inflation expectations, consumer sentiment, and consumer expectations. In case of an increase in US personal spending and income, the fourth quarter GDP figure will probably be revised up. This may support the greenback, thus dragging the euro and the British pound down further in the second half of the day. Now let's move on to technical analysis of the euro-dollar pair. I think it's worth focusing on 1.0889, the middle of the sideways range. A recovery followed by a false breakout at this level will create a strong sell signal. Later on, if the price breaks through 1.0853 and fixes below it, the volume of short positions will increase further. In this case, the euro will dip down to 1.0820. At this level, I recommend going long on rebound with a view to catching an intraday correction of 30-35 pips. Long positions can also be considered amid a false breakout at 1.0853 or in a case of a return above 1.0889 following downbeat data from US. If the price consolidates above the latter and tests it from the top down, it will be possible to add long positions, counting on a rise to the 1-month high of 1.0927. At this mark, it would be a wise decision to go short on a rebound in the hope of an intraday movement of 25-30 pips. Speaking of the British pound, a false breakout at 1.2350, 1.2355 will create a strong buy signal. In this case, the pound sterling is expected to recover to 1.2423 and probably 1.2487. At the level of 1.2487, traders may go short on a rebound. Long positions at 1.2423 following consolidation above this mark are also possible. However, I doubt that statistics will be gloomy enough to enable the British currency to hit a new 1-month high and extend gains in the second half of the day. Therefore, the best way to make a profit is to consider short positions amid a false breakout at 1.2423 or in case the price fixes below 1.2354 and tests it from the bottom up. Under this scenario, the way to 1.2285 will open. At this level, I recommend going long on a rebound with a view to catching an intraday correction of 35-40 pips. Good luck and have a nice weekend.